Good afternoon, one and all. Let's just pull that curtain there. How's everybody doing? Oh, sorry, I only just saw that. No, it was a good job you did leave that. Well done. I've just had a little bit of a drama at home, but I am with you now, and I'm with everybody here. Let me just open up YouTube. So we're in. Share my screen. There we go. So, what have we got? Just make sure I'm on YouTube. Here we go. Right, I see a few people on there. Okay, so I am in with you guys now. We've had a really good push to the upside in the FTSE. I've stuck to the trade down here. Bit annoyed after the analysis I didn't get into that that particular price point in the end. That was a shame. It might not have quite come down to where I wanted it to go anyway, but let's just get rid of some of these, and then we'll reanalyze what might be happening here. And I'll tell you what we do have with the FTSE. So if we draw in a few levels here, now I like the FTSE. I think if all the market is going up, the FTSE is going to go with it anyway. It's probably my favoured of all the markets to continue to the upside, and I think at worst, if the market does come down, let's talk about the S&P and the Nasdaq and the Dow. If they are likely to come down, I think the FTSE could at worst stabilize. I don't think it's going too far or too much lower. I think it's more likely to come down and probably just hit these lows and stabilize at these levels. We still haven't got. Do we have an absolute? It doesn't look to me. Yeah, there's nothing conclusive, is it? We're still hanging on a few key states by the looks of things with the election. 224 for Biden and 213 to Trump. So it's still very, very close and difficult one to call. It looks like a Biden win, certainly from what I was seeing earlier on, but it's not guaranteed by any stretch. Very, very close, unbelievably close, actually. So let's have a look around the grounds and see what the market thought of it and how they've traded it. More importantly, and we can see that the FTSE 100 has moved to the upside and managed to catch a bid down here. And with the way that the market has moved, it looks like there may well be, now there could be a trend line there. It's going to be difficult to draw exactly where it is, but if we use this high here, it looks like that may well be the rejection point, and it looks like it's tested these levels here. So the only entry right now is at 57.64 coming back. If we get down to that level again, then that's probably the bounce point for the FTSE 100. That's all looking good. Yeah, it all looks pretty solid for the FTSE. Let's have a look at the DAX and the Nasdaq. The Nasdaq. Now, if we're going to look for a short in the Nasdaq, I'm looking for prices probably to continue to push higher. I think there's two potential areas for a short in the Nasdaq, and again, it's getting to the top of this level here, around about the 12,100 level, or it's possible that there's a lower trend line along here, and the Nasdaq may well fall there. I quite like that as a possibility. That would be at 11,870, I would suspect. Let's just bring some pivots in as well. Now, I was talking about this earlier. What I would much prefer, if I'm going to be trading short in the Nasdaq, not that keen on the long. I've got the long in the FTSE, and I'm quite happy with that. But if I was going to take the long in the Nasdaq, the short in the Nasdaq, what I'd like to see from here is what happens really on the open of this bar tomorrow. Now, the current daily pivot. So that if we think about the same as the monthly pivot, the weekly pivot, all pivots are created by taking the high, the low, the close, and we divide that by 3. Where's my pen? Oh, there it is. So the high, the low, the close divided by 3. All we know right now is where the high and the low is. That's all we've got. So the high is up here, and the low is this one here. So the high is at around about 11771.5, and the low is around about the 1120. Now these are the futures. Looks like around about 11206, something like that. So if we quickly add those numbers together, and we'll probably pick a number in the middle, just to get an assumption. But those two numbers, so 11771, forget the 5 for right now, plus the 11206, and if we divide that by 2, that brings us at 1148. So we'll leave the we'll just assume that it's going to close near the middle for now, and that would give us 11500, which is around here, which actually would look pretty good. If the daily pivot gets anywhere near that 11500 area, that's going to be pretty good, because that would suggest that there would have to be a break of this low here, where you can see that there's a small area of support there, and possibly even the trend line as well. If that trend line was nice and straight up there, by tomorrow it would have to break down the trend line and somewhere around there. Now, depending on where this closes, if it's not in the middle point, then this daily pivot obviously will push up or below from there. But it does appear that we're more likely pushing. We're looking at tomorrow, and it appears right now that the market is quite happy to go risk on. Now the question is, why is it going risk on? What's the assumption that we can make about the move with the market right now? Is it risk on because of something fundamental, or is it risk on because of just an assumption that's happening? And my theory would be that it's on pure assumption. Now the thing with this is that, well, two things can happen really with an assumption move. Is that it can just continue to move to the upside and actually be really overly confident almost, and continue to buy into it, or we get quite wild swings. The wild swings don't look likely at this stage. I think the market is much more likely at this stage just to continue a little cruise to the upside and continue easing itself to the upside. So we are in a risk-on environment. The big issue is going to be, does that, if it's got no foundation, and this is why I bring this up really about whether it's fundamental or not. The big issue is that does it have anything substantive if this ultimately is an election move? Now, I think the election is just a bunch of noise. I think that whoever gets in power is probably going to be pretty good. Yeah, exactly, Fad. So risk on would be defined by a bullish move, if you like, a move to the upside, and risk off would be defined by a move to the downside and bearish price action. So we know that we're in a risk on environment, and we just, if we look at everything that falls into the risk on environment, which we should check, and then everything that falls into the risk off environment, which we should check, then we can get a fair idea of the overall perception right now of the market. Now we can see the Nasdaq is pushing higher. Now we'd look at things like the Kakaron, but the Kakaron doesn't define it. But the fact that the Kakaron is also moving higher just kind of shows, how the overall market is viewing the election so far. This is the DAX again. After the big move to the downside, it's recovered substantially. Dow Jones Industrials also moving higher, and the S&P also moving high. Now things can change very quickly, but then if we look around the grounds at some other potential barometers here, then WTI has not only pushed to the upside, but I think it's questionable that it may well have broken through a level here. It's questionable, but it looks to me like it may have. Now, it depends where that level is. It might be that the trend line's along there, but this looks like it's broken through, and it looks like now we're getting a bull flag WTI. Now, I'd quite like a WTI short, but probably only with a Biden win, and that is at this point in time just not announced. I think it is tense. I think it is unclear. But the market doesn't seem to mind at this stage. It's quite happy to continue to buy into the potential possibility that we get something of a result. Now, after the election's done, I do think it is quite just a bunch of noise, and let's have a look at why that might be the case. And this doesn't take too much of an assumption, but let's just have a look at the economic calendar and see what that's told us really for the day so far. In Australia, we do get we get retail sales and actually quite a lot of data from Australia, really probably over the last 2 days. Yesterday, we also had the cash rate, which was dropped. It was forecast to drop, and that has now dropped. I didn't read the RBA statement, so that's something that I think everybody should try and do, just to see where they think the Aussie might go from here. Presidential election, obviously, and then obviously the unemployment and employment change in New Zealand, which don't seem too bad. They seem to be following a certain pattern. Now, also on Monday, we had this ISM manufacturing PMI. These are really good numbers. If we bring up the graph here, now it's relative. It's relative to where we were last time. It's not relative to where we were a year ago. It's saying, have we expanded since the last reading, or have we contracted since the last reading? And you can see here, ever since the pandemic kind of came in March and April, when we were contracting, the expansion that started really in May, is when we start to really show that the really bad numbers, but the bad numbers started all the way back in September 2019. That's what was happening with the ISM. So this was giving us a clue that that things were on very shaky ground in America. But look what's happened since then. 50%. So we're now starting to expand out of the pandemic lows in June, according to in May, but then June as well was under the number. So we start to expand in June. I'm just going to take off the forecast number. We expand in August. We expand in September. Come back a little bit in October, but November's number was back on track again. So we are starting to see this expansion going on in the United States, and it's not only the United States. If we go back to the 31st of October, PMIs in PMI manufacturing and non-PMI manufacturing in China again have been, we did have a really bad read, coming off the back of 2018, really bad read. But ever since then, we're expanding. Now we're expanding from a low gauge, so it doesn't mean that we are all of a sudden, everything's going great, everything's going really well. And I suspect the stock market probably overvalued the potential bounce back. And we could start to see that come off a bit, but I'm waiting for the numbers to change. I wouldn't really be that keen on selling the stock market unless we do actually see a slew of numbers that just look like the leveling off is coming. Not that we're shrinking, but that the leveling off might be coming, because the next move may well be a shrink instead of further expansion. So services PMI also out today. That's on at 4 o'clock, and that's a number that we should also pay attention to. Again, now the forecast is below the growth number, but still with some growth, and we can see again services PMI started to pick up back in, let me see this here, back in July, and we've really held those numbers. We've been pretty good since then. Up at the kind of 57, 58 kind of region. So things aren't too bad when we start to come at the numbers. That things aren't too bad, and really, looking sort of like back, there's a lot of these numbers like this. ADP non-farm employment change, very, very weak. So that is telling us that the employment picture is not too good. But actually, when we look at the expansion with business is doing okay. Some of the issue when we continue to see employment so weak is that the US consumer makes up around about 10% of the world's GDP. So if they're not buying, nobody's selling, and that ultimately is going to catch up with the world. But at this stage, we don't have that scenario, so we don't really kind of have to take that into account. All we have to take into account is the numbers that are in front of us, and they're okay. So back to the election, it kind of draws me to the conclusion that the election is kind of noise. It's just something in the way, and whoever's going to be president, I would have thought would be bringing in some stimulus, and that's what the market's waiting for. I wonder whether the market is having a push to the upside purely as a timing. It was a timing mechanism. It's not that spooked by the fact that we're not going to get the stimulus, so it's quite happy to continue to push to the upside, and I believe that it probably will still do that. There was an opportunity to buy this earlier on, and it was a bit quick. It was, we were sort of on the show, and it all happened a little bit quick. And I had put an order in at this point, but I moved my order down a little bit because I was looking at some of these daily bars and the price action on the daily, and I just wondered whether we might come down and test this hammer down here. But we didn't test the hammer. We managed to test, what looks more like a belt hold, the low end of that, and we pushed to the upside. So there's not really a lot we can do with this today. The market has decided to go. If you're in a trade already, great. You just want to continue to manage that trade. But currently we don't really have a lot we can do with the trade. We just have to watch it and just let it go at this current stage. Now, if we're talking about the difference between the FTSE, now you guys know that I've been mentioning the Shiller ratio and the capex of the FTSE. So if we consider the Shiller ratio for the United States, then it is not too good in many respects. It's suggesting that the United States numbers are a bit overinflated. FTSE's numbers aren't overinflated. The FTSE is doing pretty well, but is the FTSE likely to break out if the States does start to come down? And I wonder whether we could actually ease off a little bit with the United States. So I am still looking for buying opportunities with the FTSE, and you can see down here that point there is starting to look like a potential for a left shoulder. And I'm wondering whether we do pop to the upside, we do start to see the United States come off a little bit and possibly pop down again. And the opportunity then becomes here, for another possible move back up again. So I'm looking for something of a reversal pattern. This is no good. This is just a bit of a ping pong. So and I don't particularly like that at all. And it's unlikely to signify that we're just going to continue higher. I think that if anything, we may well rally into this particular point here, that upper trend line there. But then I do think that there could be some selling coming in, and that's the only point that we can wait for if we're going to try and get into this on a long. I'm not that keen to go long here. Not to add to my position. I'm actually a bit annoyed that I didn't get into that position down there. It was very, very fast and just too much information going on in my head at that time. The election was being announced. Donald Trump was actually speaking at the time as well when we made this low down here, and we're in the show trying to call trades and everything else. But the analysis that I'd done before it led me to this number, and I just moved it down, which I'm a bit annoyed about. But that's the way it is, and it's not a major problem. It just means that the next price that I get is going to be slightly higher than that, and it will have to be higher. There's no doubt that if this market is going up, it's unlikely to come back down here and test this level now. I think that level is probably done. So that would be the FTSE. So my play on the FTSE is for a long, and I will look for that. But whether it comes down today, I don't know. If there's a nice big move to the downside and I can take advantage of it, then I will. Let me make sure I'm ready for the next thing here. It's going to bring Spotify over there. There we go. Same with the Nasdaq. I think that there's still some upside with that one. Same with the S&P as well. Still some upside with that one. Let's have a look at the S&P in a bit more detail as well. S&P is not suggesting. I would like to draw a level in along here and see if there is anything. And I suppose you could argue there is. This is a possible resistance area. You can see that there's a horizontal level there and there. So there is a possible area and a possible case to be made for some downside. The only way I think we could justify getting in at this price is if it was a scale in and we were willing to get back in here. So currently the price of the S&P is 34.19. I think it's still a potential short of 3,500. Now that means that if we go in here, we'll have to scale in and take into account that we also want to get in at 3,500 with stops at the highs. So we'd have to split the trade into two, just in case it wasn't to come back. And I'm not sure whether that's going to happen. I'm really not sure whether that's going to happen. Let's have a look at the price action at this area. There's only one hour bar which hasn't even formed yet, which is suggesting that it's pausing. But otherwise, it looks in pretty good shape, actually, doesn't it? Yeah, they all look pretty good. WTI, as I say, is probably a buy at this stage. I would like to sell WTI. I do really like this level, and I'm gonna have a look at it and in a bit of detail here. But what I'd quite like with WTI is to see the pivots. Is the pivots also come and meet this price? So again, low to the high to the close. Where do the pivots go? Because if the pivots were starting to get elevated, if we got another step to the upside with the pivots, and Joe Biden gets into power, there is certainly a suggestion that that would lead these pivots step up to around about there. Then we're looking tomorrow again for a potential move down, so we can possibly trade that lower, off the pivot. But we would need the pivot to take that trade. We're not going to be able to trade this in this open space, because I do feel it is a bit of open space. And this really is one of the benefits of the pivot. And the benefit really of the pivot is that it gives you something fixed on the chart that isn't necessarily that isn't subjective. Because what I'd always do is pull up a fib and see what the Fibonacci retracement tells us. And the Fibonacci retracement tells us that we are really at the last bastion of protection to the downside at 61.8% retracement here, which is great. And a horizontal level, if we were to drag that over and have a look on the dailies, I think it starts to become a bit subjective, because with this horizontal level, there are a couple of touches here and here, and maybe here, but it does become a bit subjective. That horizontal level might be a bit higher, it might be a bit lower, and any trend lines as well that could come into play. But at least with the pivot, it's something fixed. You can't argue with the pivot. The calculations, the high, low, and close. So we know that. The problem with the fib is that people may not be drawing it from here. That they might be quite happy to draw it from the range on the month, which actually so far looks all right. But actually that does look, no, it doesn't look okay. The range on the month. So, and when I say the month, I'm talking about the month previous to this one. And if we look at that one, the range on last month's, the movement of last month's price action brings the 61.8 retracement slightly higher. So it really does depend on where you draw those things. But if we can get a pivot, the daily pivot, stepping up and giving us something defined, which either shows us that the fib is the whole move, or that the fib is the monthly move, and it's in agreement with a trend line, then we've got more of an idea of the trade. Now, it's really, in my mind, it's really important to kind of get your levels right. Alan, I don't know. It looks to me like it might be a Biden win, but I just don't know. Alan's just asking on YouTube, is it a Trump win? But Biden's slightly ahead. but it looks like it's quite tight in the battle key states. Biden at 224, Trump at 213, but there's a tight thing on the battle states, and that suggests recounts. Is anything not been? What's not been announced yet? Okay, so Biden looks like he's got a win, a lead in Arizona. He looks like he's got a lead in Nevada. He looks like he's got a lead in Wisconsin. Now he needs 224, so he needs another 36 to win. Nevada is 6, so we need another 30. Arizona is 11, so we'd need another 19. Wisconsin is 10, so we'd need another 9. Maine, he's ahead, which is 4, so we'd need another 5. And then we're looking at Trump, and which we're looking at Michigan, which Trump's leading at, and that's 16. We're looking at Pennsylvania, which has got 20 votes. Trump's ahead in that one right now. North Carolina, Trump's ahead. That's got another 15. So some of the big states, it still looks like Trump is he's in with a pretty good shout, actually. Alaska, only 3 electoral votes in Alaska, but yeah, if you pull up any kind of heat map, then it's tight. It's so tight. I really don't think we can say at this stage, but yeah, it does look like Trump is edging it in the predicted seats. It's going to be fascinating to see who wins this one, really. Anyway, we are going to push off from YouTube, but thanks so much for dropping in by, guys. We will now go on to the. Yes, you're absolutely right, Brian. Brian's just saying that he thinks that the potential of the mail-in votes that might lean towards Joe Biden, because it does seem that the Trump supporters were quite happy to go out and vote on foot, if you like, and the Joe Biden camp seemed to be quite happy to have postal votes. So you're absolutely right on that, and I wonder whether that might mean that the election result is possibly. We're not going to really know it until next week, but that does point towards Joe Biden. So anyway, we must push off and get on to the US show. Thanks so much for dropping in, guys. Really appreciate it. We'll be back tomorrow. Jeff and I will both be in tomorrow, so I will see you then with the big guy, with a grandfather, and for the rest of you, I will see you in a few minutes. We'll play a quick tune, and then we'll get started. Now, let me think what I'm gonna play.